The prospect of a mortgage with a 2 in front of it today became a reality. It's the second rate cut in 2 months. The Reserve Bank seems determined to tip the odds back in favour of home buyers and business, but only if banks play the game and pass the cuts on.
We would expect that the banks would pass on in full reductions in sustained reductions in their funding costs.
But there's no guarantee. The problem is that rates for savers are already close to zero.
So when there's a rate cut, you can't take 0.25% off zero.
That's why banks will struggle to pass on this and future cuts in full.
Variable customers could find themselves shortchanged $10 or $20 a month.
But today, some evidence lower rates are helping. New home sales in May bounced back to their highest level in a year. The Reserve Bank Board met in Darwin. Governor Philip Lowe said there are tentative signs home prices are stabilising in Sydney and Melbourne. But politicians and economists say more is needed to get consumers spending again.
We need to get more money into the hands of more workers sooner to boost this floundering economy.
You get tax cuts, you get infrastructure, and if worse comes to worse, you somehow, if you like, even give them cheques.
Cheques like the emergency $900 handed out by Kevin Rudd in the global financial crisis. It would blow up the government's much vaunted budget surplus. You sense it's not on the government's agenda.
When they did reduce rates, most recently, they made it very clear that it was not due to a deterioration in the overall economic outlook.
In the meantime, homeowners who received both last month and this month's rate cuts in full will save around $116 a month on an average loan. But if you didn't get it, there are alternatives. One lender, Reduce Home Loans, today cut its variable rate to 2.89%.
When we lend money, we're the ones taking risks on the customers. They're not taking risks on us.
And the Nine Network's finance editor, Ross Greenwood, joins me live. Ross, have any of the major banks passed on the cut as yet?
Well, they have indeed. In fact, it was the ANZ which last month was pilloried by both politicians and the community for not passing on that rate cut in full that got out pretty quickly, and it didn't make the same mistake. It passed on the full 0.25%. But just in the past couple of minutes, the Commonwealth Bank has come out, and what it said is for its standard variable homeowners, it's going to only pass on 0.19%, so it can expect some criticism this month. Strangely, for those with interest-only loans, it will pass on the full 0.25% rate cut. And for savers and those who are investing money with the bank, it's saying it will try and keep some rates above 2% to soften the blow. But you'd have to expect that right now these banks are under significant pressure, especially as more rate cuts are likely to come from the Reserve Bank.
All right, Ross, thank you.